Welcome back to the Insider Insight Show, folks. I'm Dr. Dave Jan. I am honored to have back with me Mr. Gold, which is the mantra Bill Holter uh, was awarded when his fantastic partner, Jim Sinclair, went to the big trading desk in the sky, if you will, who's overseeing and probably having a good chuckle as we speak from the penthouse view up in heaven. Actually, Bill's more than Mr. Gold. Uh, he's Mr. Silver, Mr. Precious Metals, Mr. He'll tell you what you need to know far ahead of the curve, and he should be Mr. I told you so. Because Bill has predicted what has been occurring over the past several months. He told us what was coming years ago, and he was called many things, none of which were actually very nice. But what he was 100% accurate. And for those folks who listen to Bill, while everyone's running around with their, like chickens with their head cut off, and will be even more so, the folks who listen to Bill are like, why are people surprised? Bill Holter told us about that. He told us the sequence of events. He told us what was going to happen. And here's the part that the syndicate hates, which is why they target him, what we can do to best protect ourselves. For those of you not familiar with Bill, after a lengthy career in financial services, Bill actually, well, retired, if you want to call it that, in 2006. Moved his family out of the United States. Great timing considering what happened in 2007, 2008. And returned in 2011, makes his home in the great state of Texas. He joined Miles Franklin, milesfranklin.com, as an associate writer back in 2012. He now is a precious metals broker and works with Miles Franklin. He also is the top forensic economic analyst, I believe, not just in our country, but the world. As I mentioned, he's known as Mr. Gold, but should be known much more than that. Mr. Truth, if you will. Mr. Ahead of the Curve. His website is chock full of great information. Bill Holter, Holter, BillHolter.com. It's my privilege, pleasure, and honor to welcome back Bill Holter. Bill, welcome back.
Thank you for that glowing intro, Dave.
Well, thanks for all you do, Bill, and how you do it. Now, I want to start with a quote. And when I heard this quote, when I came across this quote, you were, and don't take this the wrong way, the first person, when you hear the title, you might take it the wrong way, but don't. You were the first person I thought of. It's from Steve Jobs, the founder of Apple. It's entitled, in a good way, The Crazy Ones. Here's to the crazy ones, the misfits, the rebels, the troublemakers, the round pegs in the square holes, the ones who see things differently. They're not fond of rules, and they have no respect for the status quo. You can quote them, disagree with them, glorify them, or vilify them. About the only thing you can't do is ignore them. Because they change things. They push the human race forward, and while some may see them as the crazy ones, they really are the geniuses. Because the people who are crazy enough to think that they can change the world are the ones who do. End quote. Bill, you've changed the world because of your honesty and your courage of bringing information forward and trying to help people and protect themselves from what we currently see in the financial world at this point. So, Bill, as the precious metals crazy one, tell us where we are, Bill, because this has been for the newly initiated. This has been a bit of a roller coaster ride that aren't really familiar with what's really happening behind the curtain. So level the playing field. We had a huge day the day after Christmas, and several months before that, huge day. And then we had this downslope on Monday, which many people, the newbies, became a bit petrified when in fact, well, you tell us your take.
Well, let me first answer your quote with a quote. Still crazy after all these years. Um, what what happened uh, Friday? Well, obviously, a huge spike up, and that was it's simple. And we'll get into this, but there's definitely a bifurcation now between paper markets and physical markets. So we had this big spike of $7, $8 on Friday. The Federal Reserve reportedly lent 17 billion, and then over the weekend they lent another 34 billion to banks that obvious if they're short, there was huge margin calls. So what happened yesterday, Monday? Uh, Sunday night, gold spiked another $4 or so, and then pulled back and chopped until about 2 o'clock in the morning. And if you've been in precious metals for any length of time, you have burned into your memory these waterfall events where all of a sudden gold and silver start going down and get smashed. Well, that's done with paper contracts. I can guarantee you that there were no huge hoards of gold or hoards of silver sold yesterday. The COMEX, uh, it looks like they dumped 1.4 billion ounces of silver to get that waterfall event. Now, let's put that in perspective. The world only produces 850 million ounces of silver per year, collectively, for an entire year. So the COMEX sells 1.6 or 1.7 times global supply in hours to knock the price down. It worked. What? It's not working any longer. We're 24 hours out. Silver's up $5.50, $6. I think we're within a dollar 50 of where we were Sunday night. So they sold 1.6 billion ounces. I'm sorry, 1.4 billion ounces of silver.
Paper.
The price got smashed. Paper. The price has come back, and it's interesting that the spread between Shanghai, which is a cash market, and the COMEX and LBMA, which are paper markets, has steadily widened, and we're at about a $7 spread now.
And Bill,
And I've
normally,
heard bigger numbers than that.
and Bill, in a normal market, what that spread should be what? By so people can compare, right? What should that spread be?
In a perfect, yeah, in a perfectly functioning market, it should be zero. I mean, there should not be a difference other than logistics. And logistics, you're talking about the time value of money. So let's use 6% is what the interest rate is. So for 30 days, it should be a 0.5%, not 10%.
Mhm.
And what this is showing is that uh, buyers are preferring cash and carry. They want to pay today and they want their delivery today or the next day. They don't want to wait 30 days, 60 days, 90 days. There was a lot of talk about contracts going into backwardation, COMEX contracts, where spot trades higher than a future contract, which mathematically, if there's trust, it should never happen
Mhm.
because you have an ounce of gold with the interest and carrying cost for 30 days, 60 days, 90 days, and it should be a higher price. That's called contango. But when spot goes above the futures and people are saying, I want my metal and I want it now, that's backwardation.
Mhm.
But let's look at a bigger backwardation. Let's look at COMEX and call those paper contracts because that's what they are.
Mhm.
Shanghai is a cash and carry market. That's what that is. That market is trading 10% higher than COMEX. That is systemic backwardation. That is a lack of trust in the Western paper metals markets. Both COMEX and LBMA are trading at huge discounts to Shanghai.
So here's the question, Bill. If I am If I am scumbag banker and I see a differential like that what's called arbitrage, right? I would think I would buy the gold or the silver or gold, right, in London, right, or on the COMEX, and then immediately, I can't do it on COMEX because it's not a physical market, but let's say London, if it's there, which is the operative word, if it's there. I'd buy it in London and then have it shipped to Shanghai. I'd make $5 or $7 per ounce on just doing that
Correct.
arbitrage, but that's not happening. That arbitrage should be narrowing, if not even existent, as you mentioned, but it should be
Right.
narrowing. It's not. Now, is the reason it's not, Bill, because there's no metal to get out of London to do that deal? Is that what's going on?
Right. That is arbitrage, and there should never exist the difference between the cash market and the paper market. But the reason there is a gap is because either A, they can't source the metal,
Mhm,
or B, and I think more importantly, the confidence that you're going to get delivered on your contract
mhm.
is not there. The confidence, you can't do that trade and then get failed on by New York. Because if you do, you've sold metal short in Shanghai. And if the market takes off, now you're in a short position and you go bankrupt. So I think really the lack of arbitrage is a symptom of the lack of trust that contracts are going to get delivered on. Now, speaking about of delivery, this is something I've talked about uh, for many years.
Mhm,
That ultimately the metals would fail to deliver,
mhm,
and it was always my thought process that it would be silver would fail first, and then gold either later that day or that night or the following day. I've always believed silver would be the one to fail to deliver because it was sold the most heavily short. It's a teeny tiny market. I mean, up until a year ago, it was not even a $25 billion market. The total production for a year of silver was 25, maybe $30 billion. Now you're talking, I don't know, 70, 75 billion, but it's still table scraps compared to the kind of money that's being thrown around. I mean, think about AI. What
mhm.
kind of money is being thrown around there? Think about mergers and acquisitions. So, because it's such a small market, it was easy to bully. It was easy to overwhelm the price with paper contracts. And because silver is not stockpiled, generally, gold has been stockpiled for thousands of years. Silver gets dug up, but it gets used. It gets used in jewelry. It gets used in technology. It gets used in medicinal purposes. It's used for uh, the green, the whole Green New Deal. It's
Mhm.
solar panels, etc. And now they're talking about, AI can't run without silver. And then the cherry on top, I think it was Samsung,
Yeah.
has uh, created or invented a new EV battery
Mhm,
that can charge in 9 minutes and go 900 kilometers.
mhm.
The only catch is it uses 1 kilo per battery. So that's 32 ounces per battery that don't exist. We're already in a structural deficit. We've been in a deficit, supply and demand, for 5+ years. This year, production, call it 850, 900, and uh, demand was about 1.3 billion ounces. So you're looking at a massive structural deficit. There's no big stockpiles where you can source metal from. And I'm sure some of you have seen the tweet that Elon Musk put out. He just wrote back, not good because so many industrial users need silver. So it's like the perfect storm coming to a head. And let me just say one other thing. This what you saw on Friday was, yes, that's the start of a short squeeze. I'm going to tell you, I think we're in the first or second batter of a baseball game for the short squeeze. There is so much more that has to be wrung out of this market because for call it, I don't know, call it 50 years, call it well, at least 30 years from 1996. But Comex started with futures in 1976, and I guess let me just skip backwards a little bit. The world was financed for years by the carry trade,
Mhm.
borrowing in yen because it was cheaper, taking that money, reinvesting into treasuries, guaranteed profitable trade, and a lot of that money that was used or was borrowed was used to go into stocks, go into bonds. It levitated paper markets. However, the paper, gold, and silver markets, they sold ounces. They sold paper ounces to try to suppress the price. And why would they want to suppress the price? Well, think about it. If we had $25,000 gold, how easy would it be for the US Treasury to borrow?
Wouldn't be able to.
As it was in the past, they would point at the gold price after a waterfall slaughter, like yesterday uh, in COMEX. They would point to gold and they'd say, gold bad, dollar good. Now, the only thing is, once this carry trade, once the derivatives break
Mhm.
and credit begins to cease, the whole system gets margin calls, which means stocks, bonds, they fall. You still have ability to borrow on a mortgage. If that's if that's a problem, then you're going to see real estate really begin to melt. But gold and silver, for all of those trades that have been put on for all those years, they have to be bought, not sold. Because the initial trade was a short sale. And
Mhm.
the only way to cover a short sale is to buy it. So what you're going to see, I believe, and I think right out of the gate, January 1st, because there's one more thing. China says they're not going to export any silver
Right.
after January 1st. So what you saw on Friday, I think, is going to be uh, not even an hors d'oeuvre to the main feast, which is going to be probably, and this is my opinion. I mean, I can't back it up mathematically, but I do believe it's going to be the biggest short squeeze ever. And if you want to see a short squeeze, go look at Volkswagen, go look at GameStop, look at those things, and I think silver is going to be a bigger short squeeze than that.
Well, Bill, you mentioned January 1st, 2026, where China is restricting exports of silver. There are some folks that have said, well, it might be significant, but unlikely. Well, Bill, I agree with you. I believe it is a huge significant event. And the reason is because China is the number two silver producer in the world. But in addition, they're also the number one refiner. And it's my understanding, and please
Right.
tell me if my understanding is wrong, China has been scouring the world for doré and ore being shipped over to China to be refined. And once
Yes.
it enters their airspace or their shipping space, it becomes their property. And that also falls under
Correct.
the export control. So Peru might have a contract with somebody in the United States that bought that, but it's not being refined in the United States because we have maybe, I think, one refining facility for silver and it's being sent to China. Well, then try to get it out of China, right? It's not going to happen, is it?
No, and you're absolutely right in that thought process. I would just mention that whoever it was that said, "Oh, well, it's no big deal." When you have a market that's already unstable as far as supply and demand,
Mhm.
and if you place a yoke on that market to make the supply even more difficult,
Mhm.
what you're doing is you're telling man you can't have it. And what does that do? Human beings, when they're told they can't have something,
They want more.
want it even more. They'll froth at the mouth to get it.
Well, and you mentioned Elon Musk. That's what his tweet was responding to about this January 1st, 2026 thing. And you're absolutely right, Bill. Here's what he said.
Yes.
And frankly, this one tweet or X posting, whatever you want to call it, probably woke up millions of people that for years had been discounting or ignoring what was going on with silver. And he says, quote, about
Right.
the export controls out of China coming January 1st, 2026. Quote, as you said, this is not good. Silver is needed in many industrial processes, end quote. Bill, just last week, I monitor the bought off lamestream fake media to see what propaganda they're speaking. And they had this great financial advisor on Fox Business News. And they said, well, for 2026, what are you investing in? And they talked about, oh, AI and this and that, this and NVIDIA and all this. And they said, well, in 2025, gold was up 60 some percent, 70%, and silver was up 150, 160%. What about those? And he said, no, I don't invest in things that, no, I swear to you. I don't invest in things that can't be used. Okay. This is one of their featured financial advisors. He's talking about AI investments when those GPUs have gold and silver in them.
Right. Yeah, it's stupidity, Dave. And you're talking about the mainstream media. After Friday's close, there was almost no talk of the precious metals, very little talk at
Right.
all on silver, and that was the biggest update since 1979.
Uh-huh.
Guess what they were talking about all day long yesterday and this morning?
Oh, how the bubble,
Silver and gold crash.
yeah, how the bubble burst.
Exactly.
And the Wall Street Journal said
Right.
the less sophisticated investors that have been in gold and silver had their bubble burst. Oh, stop. Stop.
Yeah, and Dave, you know what they're forgetting to tell you? Guess what the number one and number two assets this century are? Gold and silver.
Gold and silver.
Better than the S&P 500 with dividends reinvested. Gold and silver. Pet rocks to just sleep in the dark.
So
And Dave, one other thing about that, that tells you that is an illustration of the debasement of the fiat currencies.
mhm, mhm.
People are telling me, oh, you're full of crap. Inflation's 2.7%. The currencies are not collapsing. Well, I got news for you. From a year ago, or a year ago, basically fiat currencies have lost half their value versus real money,
Mhm.
gold and silver. And in case people have forgotten, some people don't even know this, but the dollar, the pound, the peso, the lira, what do all those have in common? They're words that talk about weight.
Mhm.
The pound, the peso. What I'm pointing out is all of these currencies were originally a derivative of gold and silver,
And if you
and
look at
then
the Constitution,
that
the US
that
and in the
that's how it
Constitution
was cut.
right?
Right.
Money was allocated or assigned to gold and silver, not paper.
Right. And a dollar, if you ask somebody today, tell me what a dollar is. What's the definition of a dollar? They can't give it to you, but that's in the Constitution.
Mhm.
What is it? 371.25 grains
Grains,
is
right?
$1.
Mhm. So, Bill, many people believe what we see happening geopolitically in the world is actually not connected to what we see in precious metals. Now, let's just look at Venezuela. This was put forward by a financial analyst. Vince Lancy, financial analyst, has spoken about this. He says the silver move isn't over. With the U.S. strike on Venezuela and the seizure of oil tankers bound for China, the message is unmistakable. The U.S. is attempting to restrict China's access to critical natural resources to slow its development and technological advance. We are entering a truly multipolar world with monetary metals forming the backbone of power. Control over strategic minerals and resources is no longer optional, it's mandatory for geopolitical influence. On Christmas, the shift became visible. China now sets the price, and the LBMA and the COMEX follow. In fact, follow far behind, and in fact, could even be seen as, at least in my mind, as dead men walking.
Yeah, Vince is 100% correct on that. Uh, and you just have to look at it and you have to say China can now set the silver price, set the gold price to whatever they want. Because as many contracts as they want to sell on COMEX, it doesn't matter because you can't get delivered on it. I mean, it is a speculation on price and price only because you don't know if you ask for delivery, whether you're going to get it or not.
Mhm.
Whereas you know for a fact in Shanghai, it's a cash and carry market. You pay, you get your metal.
Mhm.
So this is a huge change. And I mean, this went on, like I said, for 40, 50 years, the suppression of the prices of gold and silver. And China is liberating that as we speak by just doing business the old fashioned way, cash and carry.
Bill, over Thanksgiving weekend, actually Thanksgiving night, reportedly JP Morgan Chase moved at least a portion of their precious metals trading desk from New York and London over towards the Far East, I believe Singapore. Many people said, "Well,
Right.
that's not significant." Well, no, Bill. To me, it seems to me like they were saying, you know what?
It's
LBMA and COMEX are dead men walking. We need to position ourselves because time is of the essence when it comes to trades. We need to position ourselves closer to the new center of precious metals trading. Am I
exactly.
reading that right?
No, that's exactly 100% correct. JP Morgan is moving to the center of the uh, metal slash financial universe. Remember, he who has the gold makes the rules. And in a financial system that is more indebted than any system ever in the history of history, when this collapses, because the BRICS nations have been stockpiling gold, because the BRICS nations have the mindset of they want free and fair trade settlement with a currency that can be looked at with trust because it has backing, the power is going to completely leave the West. And I mean, we're right now. It's like a tsunami's coming in and the water's going out, and
Mhm.
everybody's walking out on the sandbar going, "Look at this, man! We got a new playground." Until the wave hits, and when the wave hits, the power in the West is going to be gone.
So, Bill, on Monday, uh, December 29th, when the paper bludgeoning was occurring with unbacked paper assets, unbacked physical on the paper takedown, you have your finger on the pulse of on the retail market, what's happening. What were you seeing? Were you seeing many people, Joe and Jane Public, coming to you saying, "Bill, I got to sell because I'm petrified," and or were you seeing the opposite, where people said, "Oh, this is just pure nonsense. This is a sale. This is an after Christmas sale that I'm jumping on." What were you seeing?
We saw huge buying, and of course, uh, we did a lot of hand holding with the usual, nervous Nellies. But I didn't take any sales at all.
Really? So Bill, when this whole weekend event, this past weekend event happened, and the banks were already criminally short, right? They had two options when it was hitting the fan on Friday. They could have covered their shorts, in other words, said, "Oh," like you and I would have had to do, right? And say, "Oh boy, I'm going to get wiped out here. it's a loss, but I got to learn to take my loss," and would have covered our shorts, and then the price would have even gone boop higher. Or the other option was to say, well, I'm just going to continue my criminal activities and I'm going to produce 1.4 billion with a B, as you mentioned, of unbacked fraudulent paper contracts to try to scare people into driving this thing down further. And they chose the latter. Is that a fair statement?
It's correct. And unfortunately, the Federal Reserve cannot print silver.
Mm-hmm.
They can print money.
Yeah.
And of course, that allowed them to double down with another paper smash. But because they can't print silver, this mathematically ends in a failure to deliver. It's 100% going to happen.
So, Bill, you mentioned the Federal Reserve dumped into the banks' pockets to cover their margins. 17 billion on Friday, another 34 something billion, total 51 billion plus over the weekend, including Friday, to cover their margins. Bill, is it safe to say that those very banks that the Fed bailed out, let's call it, which it was, uh, are in more tenuous positions today than they were even last Friday because they decided to criminally add more unbacked paper contracts, and they're in worse shape now than they were before they got the bailouts. Is that a fair statement?
100%. They're more short. They're short more metal that they don't have. Just makes the problem bigger.
Bill, is it safe to say that this is a far worse situation from on the banking side of the equation than what happened in 2007 and 2008?
But you could just look at commercial real estate and say, yes, it is. I mean, look what's already happened to commercial real estate. But yet nobody's stepping up and saying, we took these losses, we got to eat it. I mean, you're talking about over $1 trillion in losses of commercial real estate. And how many people go out and buy an office building with cash? Not a lot.
So Bill, play this out. Are we looking at a situation as this plays out uh, fairly similar to what happened in 2007, 2008, where the government's going to come in and essentially print God knows how many
Of course.
trillions of dollars at the taxpayer essentially holding the bag, driving the purchasing power of the dollar down further. We're going to create trillions of dollars to bail these criminal banking syndicates out that have been criminally manipulating the precious metals market for 50 years, and it include all the way through what they did over this past weekend.
Yeah, the gold and silver, the manipulation, the suppression, that is the big top of the circus. But they tried to make it look like it was just a little uh, little sideshow. But that is the center of it. That's but because they were successful at that, they were able to lever up the entire system, and including the U.S. Treasury and including the Federal Reserve. Look at their balance sheet.
Mhm.
I mean, if you go back to 2007, 2008, I think the Federal Reserve balance sheet was $800 billion, and by 2010 it was 10 trillion. Now they've backed it off a little bit, and they've figured out they can't they can't do QT. It's like my past partner Jim, he's the one who coined the phrase QE, to infinity,
Mhm.
quantitative easing to infinity, and that is just uh, mass production of dollars, and it's basically unlimited lending and creation of dollars by the Federal Reserve to try to backstop everything that's breaking down. And there's a lot of markets breaking down,
Mhm.
under the hood.
So, Bill, you're the visionary. Give us your vision of how this plays out over, and let's just go a month out. I mean, because I don't think it even goes a month, but play this out over the next month. What are we going to see? Do you believe?
Okay, so January 2nd, we'll probably have strong, very strong, especially silver, with January 1st being the cutoff date for any new shipments of silver. That's going to affect supply. I mean, I don't know time-wise over the month, but we very well could get a failure to deliver. We very well could have the biggest short squeeze in the history of history because these ounces, there's one real ounce for every 300 paper ounces that represent the one real ounce.
No, say that
But
again, Bill. That's really
silver, and I've said this all along.
say that again, Bill. That's really, really important because people will never hear that in the bought off lamestream fake media. Say that again. That's really important for folks to listen to.
Yes, it's a game of musical chairs. For every one real ounce that can be delivered, there's like 300 paper ounces via contract that that 1 ounce represents. It's musical chairs inside a crowded gymnasium with one chair.
So, Bill, you've always said,
Now,
that,
once we,
go ahead.
I was just going to say, once we get a failure to deliver in silver, that is game over for the entire system because then gold will fail to deliver
Mhm.
and then that will spread. It'll spread like wildfire because confidence will be completely broken. And you either have the metal at that point in time, and this is the important part of describing the month of January. Either you have metal, physical metal, that you have either in hand or that you can get to, or you don't. Because once those two markets blow up and fail to deliver, I guarantee you what happened back in April of 2023, that weekend where the shelves were wiped out, that's going to happen all over again. But only this time, I'm not going to be able to tell you, yeah, but I'll still take your order. We can get your metal in 6 weeks. That's not going to happen. Either you're in or you're out.
And Bill, you've always cautioned us that when this event happens, that it will be a daisy chain reaction around the world because all these banks are interconnected through their derivative positions and the like. And this will in turn lead to a credit meltdown, which in turn affects every
Right.
business of the in the world, which in turn affects supply chains. Is that an accurate assessment?
Right. No, absolutely correct. I mean, for years, I've used the analogy of a loaf of bread. You look at a loaf of bread and you can't imagine that there was credit used, but you've got a farmer who has a tractor maybe on credit. He buys fertilizer and seed on credit. He takes that, harvest, brings it to a silo. The silo uses credit. They ship it, and all the shipping, by the way, all the trucking, that definitely uses credit. Then it goes to the producer. They produce the loaf of bread. That's using credit. Then it goes to the store, which is probably uh, delivery plus 30 or delivery plus 60. There's more credit. If credit stops, you're not going to eat bread or anything else unless you have it on hand already or have the ability to grow it yourself.
Now, Bill, on your website, billholter.com, you have an area about preparedness. Could you
Right.
talk to our listeners about that, educate our listeners because it's fantastic.
Sure. Yeah. It's written by a really good friend of mine. In his younger days, he used to take a pack of mules into Idaho for 6 months at a time. And my nickname for him is Grizzly for Grizzly Adams, and it's titled Grizzly's Corner. He's done a great job, written I think about a dozen articles on various subjects for prepping. There's all kinds of links, and he even talks about, I used this link. I didn't really like it, but I haven't found anything better yet.
Mhm.
I mean, there's probably 100 or more links to different products for whatever you're looking to, whatever holes in your plan you're looking to plug. If Even if you're a hardcore prepper, it would be great for you to go through that entire section because nobody knows everything. and you'll probably find something that you forgot.
Hmm.
And if you find something that he forgot, let me know and we'll pass it on to him. But it's a great, great resource if you're trying to prepare yourself and your family for what's coming.
So, Bill, to those that are saying, well, I understand all this and I get this and I'm going to act upon it, but I think there are more down days coming and I'm going to time it just perfectly to jump in on one of these really big down days because, well, yeah, Monday was a down day, but I didn't get there in time and Tuesday went back up significantly. So I'm just going to wait for that next down day. Bill, what do you tell those folks?
Those are the same people that have been saying it since $15 silver, and they've been saying it since, you know, $1,200 gold.
Final question, Bill. Is there such a thing as having too much gold or too much silver?
Uh, you're asking me, is it wrong to have too much money? Because that's what they are. They're money.
Yeah, right.
Gold and silver are monies they can't bankrupt
Nope.
in a system that's bankrupting. And for the last probably 5 years now, whenever anybody asks me how much of my portfolio should I allocate to gold and silver, my flat out answer is whatever you don't want to lose. And this 100% has to do with the great taking.
Hmm.
All of those laws are on the books. Those laws they started in 2014, but it is fully on the books in the entire Western world that if your institution goes down, for instance, your broker, you buy stock, you see it on your statement, that's my stock. No, it's not. It's on your broker's balance sheet. They are the owner for your benefit. But if they go bankrupt or get insolvent, that's not your stock. It's their stock, and they're going to take your stock to fix their mistakes, fix their problems. Same thing with banks.
That's right.
You're no longer a depositor.
Nope.
You are legally, you are legally considered the most subordinate lender that they have. So if there's anything left after their bankruptcy, you'll get something, maybe.
So many people
So
are under the
that's my
delusion.
response is
Well, and
whatever you don't want to lose.
but that's an important point that folks don't want to talk about that people need to hear that you do. Very few other people do. People say, well, I have money in my savings account, my checking account, and that's protected under the FDIC of up to 250,000 per account. But Bill, you go to the FDIC account and there's supposed to be, I think there's something like $17 trillion or something they're supposed to be covering, and they have like a tenth of 1% as far as reserves set aside, right? And you're right. Once you
Right.
put your money in that bank, it's their bank. Yeah, it has your name on it, but no, it's really theirs. And if and people say, well, that's never happened in the United States, and it has. And I pointed this out in a video I did with my great grandfather in 1907 and 1908. That's exactly what happened in this country.
Right. Several times. I mean, think about the 1930s.
Yeah.
How many banks went under in the 30s and people lost everything?
But they want people to be ignorant of history. That way they can't anticipate what
Oh,
potentially is
yeah.
coming down the line. But Bill, you are the antidote to
Dave,
that.
Dave, just a funny antidote, if you will. They don't want us to know the truth. The truth, all of a sudden, in 2025, is that the United States was founded as a Muslim country. That's what they want you to believe. I
I
mean,
know. I know.
it's gotten so beyond retarded. It's not even funny.
That's terrible. Man, men can have babies in this country, Bill.
That too. I
Yeah.
forgot about that.
Yeah, that's another biological mystery that
Let's not get started
I
on that.
missed that. I missed that whole part through on my medical education, medical school, integer. That I missed it. I missed it. The women of the View obviously didn't miss it because that's what they're pushing in the football. Right? Bill, you've been very generous with your time. You are incredibly courageous, as I mentioned at the introduction. You have provided folks a tremendous amount of information over all these years and continue to this day. I thank you for really giving us incredible insight into what happened just in the past week. Because if folks watch Fox Business News or CNBS, as we call it, or read the Wall Street Journal or Barron's or the New York Post or the New York Times or whatever it might be, or Bloomberg, they heard none of what you spoke about in the past 45 minutes. And your bringing this information forward helps beyond the people who listen today and view today, because I believe, based on the track record of our listenership and viewership, they will take this information and they will pass it on to all those they know and love, and in the process educate, empower, and enlighten them. And that's really, Bill, what you have done over all these years. And you've gotten immense grief for doing it, and most folks would have just stopped, but you didn't. And I sincerely thank you for your service to humankind, because you have, and you've helped so many people, not just for the decades you've done this, but for the years to follow. And I thank you, Bill, for everything you have done, are doing, and will do. And now, folks, I'd like to thank you for joining us today. And now you need to do what Bill does. Pass this on. Educate, empower all those you know and love. Maybe even some people you don't even like, to get them the information they need to know. Until next time, Dave Janis signing off. Dream big and dare to fail. Thank you for joining us today.